Hello guys. Yeah, in this video I'm going to explain the process that led me to taking this trade yesterday, which is yesterday NFP. So let's dive into it briefly. So what happened is, when I open my chart, although I trade in 5 minute time frame, this is applicable to any time frame. So it's not maybe 5 minutes is special, but it's just like I master 5 minutes more. So when I open my chart, what I do is I want to see what the 5 minutes is doing, and you can see, if you look at it from behind, you will see that 5 minutes was giving us bullish, bearish. Now it's giving us bullish again. So what I do is I start marking my structure, and as I said, I want to see a situation whereby, let's say we are having a situation like this, and then markets was giving us a structure, break of structure. I want to see where market will change character or will continue the structure. So if the market is continuing the structure, I'm flowing with the river of the market, then the flow of the market, sorry. So but if we have a change of character like this, then I'll be looking for buy. So that's just it. So, and if you look at this here, sorry, let me clear this. So, and if you look at it, this structure is bullish. So all I need to do is I marked this level as my low and this level as the high. So this is the current situation when I open the chart, and then I observe that if this market wants to continue going up, we are to create higher high again. So I noticed that market took out probably inducement here, mitigates maybe a fair value gap here, and then this fair value gap seems to be mitigated and market push up, although I'm not interested in buying here. So even I was not even on chart. So what happened is, after this, market gave us another break of structure. So when that happened, I waited, and if you look at this, break of structure happened around 6:40 a.m. So I was unable to, I can't even be on chart by that time. So I marked my structure. So this may give me a valid break of structure here. Why? Because market took out an inducement here, something like this, an inducement here, and market broke this level, not with sweep, first attempt sweep, second attempt sweep, third attempt break of structure. So that left us with a situation that we have like this, and we broke up. So you will see that structure has been confirmed. So after that, what I do is to mark my inducement, because if you look closely, market did something like this. After market was able to break this level like this, the final move, market did small pullback, double pullback, then market drop. All I want to see is that I want to see a first pullback taken out, then mark my POI, then do what? Then look for my entry. So I only take trade based on two POIs. The first one is this, and I look for the last one. Probably I can have it set up here, but no, let me check. Inside bar. So there is no other POI again. The market is likely to come and mitigate. Every POI has been mitigated. It's only if we have this. Yes, I think this is valid. So only this. Every other thing here has been mitigated according to my plan. So it means the market will go to unmitigated order block or order flow before you continue the movement. And all I do was to wait, because this is the only order block I was able to spot that time. Then I waited for here, watch the market closely, and wait for a confirmation then I execute the trade. So it's that simple, not that difficult, and that's why we were able to catch 1 to 3. Because my plan said I should only go for 1 to 3, that's why I couldn't catch all this move. I have to play by the rules that I set for myself. So assuming that I want to catch this far, we'll be talking about 1 to 9. But market always present opportunity, so there is no point in want to catch all the move at once. So that's how we were able to catch this move on Friday, and it was a good way to to close the day. So what I see is when market is giving you higher high, higher low like this, wait for the last low the market created to be taken out. Market can take it out and still drop, but as long as this move continue like this and break, you see we have a break of structure here like this, break of structure. So once you spot this situation, this liquidity has been taken. This liquidity serve like a fuel that push the market up. So what you are looking for is another fuel that will push this market up again, and you are not expecting to buy here. You are expecting to buy low, then take profit at high. So in this scenario now, you have this first pullback as your inducement. Then if I'm to take a trade, I will look if this is valid, this other block. If there's other block here, if it's valid, I'm taking the trade. If it's valid, I'm taking the trade. If it's valid, I'm taking the trade. But only other block that we can take trade for, mostly according to what I was taught and how I've been trading, is that the first pullback serve as an inducement, the second pullback serve as a valid order block, the third pullback, if it's valid, serve as an inducement. It's called SMT. It's an inducement for this order block. So all other block that is going to be valid, or that the market is going to react for, must always have an inducement. Some people call this engineer liquidity, which is also correct, but the simple term for it is still inducement or liquidity. So look at it. We take, if market come back here like this, if the market come back to this your entry like this, you can look for your confirmation and take the trade. But sometimes market will give small direction and it will fail, and it will come here, then you buy to the up. So you see that structure also confirm here, structure also confirm here. So if the market continue to do this, this still remains that you have your low here that must be protected, and until the market come back, take out this low, then you have your high here. The market will come and break later. But in this situation now, you look for your extreme. If you have other block here, you mark it, other block. If you have one here, you mark it, other block. But this one is an SMT, smart money trap. You don't buy here, you don't buy here, because this one serve as liquidity, this one also serve as liquidity. We only use two other block to enter the market. So and most times market respect them. You know, no strategy that is 100%, but most times market respects them. So you look for this mitigation, then boom. So that's it, guys. This video, I don't want it to be too long, about 9 minutes plus now. So if you have any question, you can drop it in my comments. I will attend to it. But this is the only way I approach the market, and this is the only pattern I look for in the market, combined with the directional bias where the market is actually going overall, maybe in 1 hour and so on, or 4 hours. So but these are I execute my trade in all time frame. If I'm using 5 minutes, if I'm using 10 minutes, and 15 minutes, 1 hour, these are I execute. So that's it, guys. Thank you. Bye.